SCHD is one of the most popular dividend ETFs, and I'd go as far as to say it is one of the most popular ETFs in the United States, and it is why it is one of the few ETFs I've made videos on in the past. This ETF has achieved this status by giving investors some pretty amazing returns over the past decade, and also allowing them to get some pretty solid passive income. However, for the past few years, the price of this ETF has been stagnant, and recently it has done pretty poorly, with this year proving to be tough for the Schwab Fund. For that reason, I'm going to talk about why I think this dividend ETF is going through some negative trends and whether I think it is cause for long-term concern. Anyways, let's get right into it. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. Let me just preface this video by saying I am a firm believer in SCHD, and that is why my most popular video goes over my thesis on why I think this ETF will do well in the future. However, admittedly, the recent performance has definitely been an eye-opener for me and causes me to believe this fund may have some fundamental problems that should be addressed. Year to date, the fund is down nearly 10%, which is harsh when compared to the other funds such as the Dow Jones Industrial Average, which is flat, and the Nasdaq, which is up 23% in the same time frame. Even factoring in SCHD's high dividend yield, this is clearly a large underperformance that is definitely a little bit worrying. For an ETF that's supposed to be replicating the Dow Jones Top 100, it seems to be underperforming the Dow Jones quite a bit this year. The share price of SCHD is down to the mid 68s, which is as low as it was all the way back in early 2021, meaning over the course of 2.5 years, the price has barely moved. Even factoring in the dividend, this doesn't seem great, and we should probably talk about why. This lack of performance, especially this year, has been caused by the high interest environment currently being experienced by the US economy. As the Federal Reserve tries to cool down inflation, they hike interest rates, and as a majority of the companies within SCHD's portfolio are more mature companies, high interest can definitely affect their margins a lot, resulting in lower revenue and hurting SCHD's overall performance. In addition, some of SCHD's biggest holdings are simply stocks that have done poorly during this time frame, and some of their positions are something I think should have been changed a long time ago. The biggest example of this is Verizon, which is their fourth biggest position, and although I understand Verizon has a huge dividend yield, their lack of growth in capital and their decrease in dividends should have been cause to terminate this stock completely out of SCHD's portfolio. I know this ETF replicates the Dow Jones with a dividend requirement of at least 10 consecutive years, but I think if SCHD is truly trying to prioritize dividend growth and longevity, stocks like this simply have to go or should be weighted much lower, because dividend growth for Verizon in recent years has been non-existent. These requirements that I just mentioned have stopped SCHD from holding stocks like Apple and Microsoft, which I think is a bit frustrating, and it has caused the slump, especially year to date, as the recent market growth has been caused almost entirely by the big Nasdaq companies. I know SCHD has the requirements and wants, but sometimes I truly believe that Schwab places these requirements over common sense, which has hurt the fund dramatically. To put it in summary, the poor performance has been caused by high interest rates, as they are weighing down the most on the companies within SCHD's portfolio because of their mature business allocation, and SCHD's lack of technology exposure has seriously aided in this underperformance. That being said, should all of this be cause for concern for investors? Yeah, maybe, but should this be a reason to sell the ETF? I still don't think so. Despite the bad news surrounding the ETF, as with all things, it is important to look at the bigger picture. Remember when I said SCHD hasn't changed at all since early 2021? Well, fun fact, neither has VTI in that exact same time frame. The only reason SCHD seems to be doing worse over this time period though is because their recent performance has been so poor. However, during markets like this should really be expected, as SCHD's largest companies simply cannot generate as much revenue as they are normally able to do. Also, because of their high dividend yield, SCHD has technically outperformed VTI in this given time frame, because when markets are flat, stocks that pay higher dividends almost always win out when compared to their growth alternatives. Also, I think it is worth noting that SCHD is pretty resilient, even if it may not seem like it with this recent drop. SCHD has a 5-year beta of 0.82, meaning it fluctuates less than the market average. In addition, the stock's higher yield and more mature allocation means you shouldn't be super worried when holding it. The average PE of the ETF is also lower than the market by a pretty significant amount, meaning SCHD holds very little or almost no speculative companies, which although can be bad for short-term growth, can be better in the long term. This was very clear in 2022 during the bear market. During this entire year, SCHD was down only 6.54%, which is far less when compared to the S&P 500, nearly 20% drop during the same time frame. Although SCHD's 10% year-to-date drop is definitely uncomfortable for some investors, some other dividend stocks, especially in the real estate and consumer discretionary area of the market, are down even more, giving just a little bit of insight into why SCHD is performing the way it is. Even if it isn't something that'll last forever, and generally this recent underperformance isn't that bad. SCHD's recent woes can seem scary, but it is important to note that during this time, through dollar cost averaging, dividend reinvestment, and dividend growth, you are still growing your income through this ETF despite the drops, which is ultimately the important part of what makes this ETF so important because of that dividend snowball. Speaking of dividend growth, SCHD has a great track record of it. SCHD has consecutively increased its payments for 11 straight years, and its dividend has increased by almost 3 times in the last decade, which is fantastic for shareholders. Overall, I think that this ETF does have some issues, but that they're overblown for 2 big reasons. The first one is that since so many people own SCHD, you are going to hear so much negative talk about it during times like this, really no matter what. The second reason is that the recent underperformance isn't reflective of the long term. This recent slump has been extremely odd for the ETF when you look at its track record, and it's due to the odd economic environment we are currently in, and this ETF should be poised to recover when conditions return to normality. I do not think this ETF should be your only position or even your biggest position. I think this is a perfect ETF in a portfolio in order to counteract heavy tech allocation. However, owning SCHD without a good amount of exposure to tech outside of this ETF is definitely cause for concern and something I suggest against. I have seen some people in the past say online to only buy SCHD, which I think is ridiculous, but I still do think that this ETF is good for the long term depending on what your portfolio needs. Ultimately, although the short term does seem scary, I do not think you should sell this ETF, and for people who are holding for the long term, you guys should be solid. Anyways guys, thank you for watching this video. I hope you enjoyed it, and if you agreed with me, let me know in the comment section below. If you didn't though, let me know as well. I would love to hear about differing opinions or maybe another ETF that you think is better than SCHD. Anyways, I will see you all in the next video. Goodbye.